it's nice to meet you. I'm a native New Yorker myself. I'm down in Charlotte, North Carolina now. So nice to meet you.
Nice to meet you. Where in New York are you from?
Born and raised in Brooklyn.
Me too. Bushwick originally.
Okay. Well, nice to meet a fellow Brooklynite.
Yes, likewise.
Okay, guys. So if anybody else wants, you can feel free to take some time now. You may as well start introducing yourselves as people fill in. What we normally do is we encourage people to do a 30-second elevator pitch of themselves, their name, where they're from, what their background is in real estate, and what they're hoping to get out of tonight's event. So who wants to take the lead and step up?
Hi, I'm Juan Perez. I'm from Kansas City, and I currently work at the light company here, local light company. I'm pretty much a new investor. I've been doing it for maybe 4 years, but relatively slow. And I'm looking to meet people and hopefully try to get more experience and more information on how to do this right.
Hello, hi, Victoria here. I'm in Greensboro, North Carolina. Totally brand new here, new in the industry. I am just getting to get my feet wet as a leasing consultant and estate management, learn as much as I can, and hopefully at some point get into the big time investing. In the past, I've done my personal individual purchases and sold and did pretty well. So I do believe in does pretty well. And thank you for having us.
Great. Thanks a lot for joining tonight. So what we'll do is we'll open up. Jerome, did you want to start with, you had an introductory video, or should we continue with networking for now?
Continue with the networking. I just have a slide up to let people know how to get the best out of this meeting.
Sure. Okay, great. So, so guys, who else wants to step up? We've had 2 people step up, and I'm sure we have a lot more that want to do intros. So you may as well take the chance. Right now, you have these first couple minutes to let people know who you are and what you do.
I'll finish off where I started. So I'm new to the real estate industry. I work for a prop tech company. I'm here to just gain more insight in the industry and gain more knowledge. But I'm from New York, and my name is Gerard for the new ones that haven't met me. Thank you.
Awesome. Well, we definitely have some new faces tonight, so it's always good to see some new people as well as a few returning regulars. Who else do we have that wants to step up?
Hey, Maurice here. I am a digital marketer by my day job. So I work for or with Salesforce implementation specifically. So I am been investing for about 3 years now on a duplex as well as a short-term rental, and just looking to dive into the apartment space and learn a little bit more about this specific industry and investing type, as well as grow my portfolio and just get to learn. So good to meet everybody.
Awesome. Well, it's good to see you. I know we connected on Bigger Pockets, so it's always nice to put a face with the name virtually.
Yeah, absolutely.
Okay, who else do we have? Who's ready to step up and do an intro?
What's up, guys?
Hey, guys.
Can you hear me?
Yep.
Hey, Jaron. Sorry, I stole your thunder there for a second. I'll introduce myself real quick. This is Bhaskar Pandey. I'm not necessarily new to real estate. I've just done a few deals, got a couple of rental properties, but I want to pursue this more regularly and just want to learn more. I do have a full-time day job also in the tech industry, like many others here, but I think level up, I need the right processes and want to meet the right people. So Mark Pantak invited me here tonight, and here I am. Nice to meet everybody.
Likewise. Okay,
welcome.
Okay, we got a few more. Who else is ready to step up?
Okay, I'll take this one.
If we don't get any volunteers, we'll have to start cold calling. So we encourage you to step up before we randomly pick you.
Can you hear me?
Yep, go for it, Jeff.
Okay. Hey, everybody. My name is Jeff Helms. I'm a residential broker in Albemarle, North Carolina, about 45 minutes or so from Charlotte. Just trying to learn as much as I can about some things about real estate that I don't know a whole lot about. Also, I'm helping with co-organizing with Charles and William over in the Charlotte multifamily investor nation meetups that we have once a month. I'm gonna start that next week. But I just think you just can't get too much knowledge, and network with other people that know more than you do, and just try to keep moving forward and do the best you can and learn all you can.
Awesome. Thank you, Jeff. And who else do we have ready to step up?
My name is Charnel, and I am from Atlanta, and I have a couple properties that I manage. So just want to learn more, like you said, to be great, not just good. So I want to learn more and also want to build my portfolio.
Oh, fantastic. You come to the right place for that. Okay, who else do we have? Kenneth, how about you? I know you're a regular. Do you want to step up and do an intro?
Yeah, hey everyone. Hey Charles. Ken Hines. I currently live in Eastern Pennsylvania. Retired Army, so I lived all over the place. A bunch of single families. Now looking to scale up into the multifamily range. Did a 1031 where I bought a 10 unit in South KC, Overland Park this spring. I'm looking to do it my second one, probably fall or early spring 2022. Thank you.
Great. Thanks for coming. And I see we got a couple of new people tonight, so we'll start going down the list, and we'll see who else is going to be doing an intro. How about Jerome Joseph? Are you ready? Okay, going once, going twice, strike three, you're out. So let's go down the list. Who else do we have here? How about iPhone? Unidentified person with an iPhone.
Hey, sorry, that's probably me. Can you hear me?
Yes, we can hear you. Go for it.
Hey, this is Ricky Johnson. I've been to a couple of the meetups here in Charlotte. And so I'm basically just learning about multifamily, trying to learn as much as I can. So just been listening to different audiobooks, reading different books, and trying to just get a little bit of education. So I wanted to drop in and learn some more.
Ricky, it's good to see you. I know we connected at some of the recent events locally.
Yep. Thanks for having me.
Thanks for coming. And how about Sudden? Sudden, are you ready?
Hello, can you hear me?
Yep, we can hear you.
Okay. Just was able to log in. I had problems with my Zoom. Sorry I'm late. But yes, if I understand correctly, you're asking a little bit about why we're here.
Yeah, really to do an elevator pitch. So you just give your name, where you're from, your background, and what you're hoping to get out of tonight's event.
Okay. Yes, again, Pierre Sutton, and I'm from Charlotte. Been here over 10 years, and my background is in rental properties. I have 2 rental properties out of my local area, one in Michigan, one in Georgia, and I'm looking to expand that locally and get more information about multifamily.
Pierre, good to see you. I didn't recognize you at first, but with just the last name, it threw me off.
Right. Yep.
Okay, so then we got a few more here. How about Sandeep? Long time no see. Do you want to step up and do an intro?
Hey guys, how are you? Sorry, I sleep very early. That's why I haven't joined lately. I'm based in Charlotte, and I'm a property manager. I have 100 plus units myself, and recently this year I started in commercial as well. So I bought a building which is a Keyman office building, 66 units. So slowly trying different things.
Okay, fantastic. And there's only 2 more that I see, unless I'm missing some. But how about Mark L? Do you want to step up? Are you ready?
Sure. My name is Mark Luver, and I'm actually on the other side of multifamily. I've constructed about 1,000 units in the last 2 or 3 years. I work for Choke Construction. Starting to get a little bit more on the investment side, but just want to learn more of what I can do as a project manager when turning buildings over for easier punch lists and what's going on out there. So kind of the other side of networking, if you will.
Great. Well, if there's anybody in here looking for new development, I'm sure that they'll want to be in touch with you afterward. And the last one I see here is Victoria B. Victoria, are you ready?
Actually, I already spoke.
Oh, I apologize.
No worries, but I can say again, I'm new here, first time, new in the industry. I'm getting into property management as a very entry level listing consultant with the goal of getting into management, property manager, whatnot. I have owned my own property in the past and sold and did pretty well. So I do believe in real estate big time. So again, thank you for having this. And I'm just looking forward to just learn as much as I can. Again, I'm just getting started tomorrow with my first assignment. And I'm just looking forward to learning a lot. Thank you so much for having me.
Thank you. And I see we had one late addition, but he's a regular, so we'll put him on the spot, and that's Robert Johnson. Robert, you want to do a quick intro before we start our presentation for the evening?
Okay, I'm Robert Johnson, Shreveport, Bossier, Louisiana area. I have 15 properties. Just sold the house I was living in to move to a new one that we fixed up, and leasing to own that. And got some good news today that since it was on a variable rate mortgage, the mortgage went down $50 a month. So my return on investment went up that much.
Well, that's always great news. And hopefully you stayed safe with the hurricane.
Yeah, we didn't even see rain from it. So up here in the corner. So
good. Okay. Well, what we'll do, I believe Jerome has an introductory video that he's going to put on for everybody, and then we'll turn it over to our guest speaker right afterward. Jerome, at this point, do you want to mute everybody?
Yes, I'll do that. That's actually a good idea.
So two quick housekeeping notes, guys, before we get into it. Number one, we are going to mute everybody. So Dave, in particular for you, is our guest speaker tonight. Just make sure to unmute yourself afterward. And if you have any questions, just make sure to either type them in the chat box or to speak up after the presentation. You could ask Dave any questions you have at the end. Second thing we would say, well, it's great to attend tonight's event. Keep in mind, as one of the bullet points Jerome has on there is to use the chat box. So what you want to do with the chat box is you want to put your contact information, and you want to make it easy for people to get in touch with you. So that way, keep in mind the event itself is great, but it's what you do after the event that counts. So you have to be taking action. You have to be out there actively building your brand and building your business. So let people know who you are and where to find you, because that's how they're going to be able to get in touch with you when the event ends.
Thanks, Charles. All right, everybody. So welcome to here's what we're doing. We're trying to bring you more value and bring you more structure. We're trying to be more professional in our presentations, and I'm going to demonstrate the ways that we're trying to do that. So I had a call with Mark and Charles earlier, and we're going to be doing some rebranding and restructuring. Right now, we are going to gear our brand towards multiple streams of income and passive investing. So we're taking this group from strictly like real estate, and we're going to turn it into a more broad category of real estate investing and passive income. Okay. Earlier. So these are some tips, and I just want to go over these. Like I had them up when we were networking, but if you're going to have success in this business, I encourage you to follow these bullet points. And one of the bullet points that I like to emphasize is turn on your camera, because in real life, when you network and you see people, they need to see you. If you want to build trust, you want to build business, people need to see you. They need to see your face. So you can't hide behind a black box or a name and think that you're going to have a lot of success in this business. You have to turn on your camera so people can get to know you and understand who you are. All right. Now, I got some tips to get the best out of this event. Take advantage. We do not offer the recordings for these events. It's only we offer the recording if you pay for it. So one of the ways to take advantage is take as many screenshots as you can and take as many notes as you can. If you want a recording, I'll tell you how you can get access to that recording a little bit towards the end of this presentation. Take all the screenshots that you can. Sometimes people ask for the slides, like the speaker slides or the presentation slides that you see here. If you want access to those slides, you're going to have to become a member. We're forming that membership, and that's the way you get access to the slides, the recordings, and all of the past events. A little bit of housekeeping, like you see this link here. Anytime you see these kind of links, that's a link to a resource. So if you collect the slides from us, that's a link that leads out to something that you can use in your business. Next, speed. So if you collect the recording, we'll send you the recording. And something I want you to be mindful of, a lot of people don't play around with, but you can speed up and you can slow down your videos. So that's another way that you could benefit and learn from this content. So don't be afraid to play with the speed on videos. Go up, go down. If you think somebody's going a little bit too fast, collect the recording and slow it down. If you think they're not going fast enough, collect the recording and speed it up. It's up to you. Engagement. We highly encourage engagement. If you want to interact, if you want business, engage and interact in the chat box. Ask your questions, interact with other members. And then we have like a Facebook group. Mark has a Facebook group called the 21-Day Intensive Challenge. We're going to, I'll put links to that a little bit later. Now, this meeting is brought to you by us. It's me here, it's Charles here, and Mark. So this is the leadership team, and we are the ones bringing you this event. First and foremost, we're all real estate investors. That's all our background, but we all have different skill sets and different experience within real estate. So this is brought to you by Mark Pantek, Charles Seaman, and Jerome Lewis. Now I'm going to go over a little bit of our background, a little bit of our skills. So you got Mark Pantek. Mark Pantek is a coach and a mentor. Mark was actually my first real estate mentor. Mark is a creative finance expert, and he does real estate notes. So if you need help, anything regarding real estate, reach out to Mark. He's a great mentor, a great coach. He's done over 300. I might be wrong, but I know last I checked with Mark, he's done over 300 deals. And we got websites coming to you really soon. So markpantek.com will be up really soon. Next, we have Charles. Charles is our multifamily syndicator. So Charles is our multifamily expert. If you have any questions around multifamily real estate investing, go to Charles. He does a Saturday underwriting session that's free, and he'll tell you about how you can get into that a little bit later. Charles is also an underwriter, I believe. So I believe he underwrites or pre-underwrites. I don't know the terms exactly. A lot of their real estate deals. So I know a lot of people are interested in underwriting. Reach out to Charles and he can help you figure that out. And then Charles he's going to have his website up really soon too, charlesseaman.com. Then you got me. I am a real estate instructor in another life, or when I'm not doing this. I'm also a digital marketing and tech. So I specialize in digital marketing and tech within the real estate industry. If you have any questions or you need any advice regarding digital marketing and tech in this industry, just reach out to me. My real estate experience is wholesaling. So Mark taught me how to wholesale, and I took my skills, my real estate investing and my digital marketing, and I turned it into virtual wholesaling. So if you have questions around that, just reach out to me in that regard. And then my website is jeromelewis.com. These are our core values here, and we are all about education. So we want you to get educated, educate yourself so you can take the proper actions. We're about execution. So we want you to go out there. We don't want you in analysis paralysis. We want you to execute in your business. Then we like adaptation. So you have to adapt. Something might not work all the time. So adapt your skills, adapt your strategy, adapt your personality. We're all about collaboration and teamwork. And then accountability. So that's probably my favorite one of them all, the accountability one. And then last but not least, this is another favorite of mine, is technology. So we use all of these things and we use technology to get them to you. So we got people from all over the nation, and we're using technology to tap in to those different people and those different resources. All right, so those Facebook groups that I talked about, join our groups. We got some public Facebook groups that we're building up for you. These groups are here for you to mastermind with others and get free training and free resources. I'm going to put links to the description once our speakers start speaking, but we got a social media and digital marketing group. And then we have Mark's 21-Day Intensive Challenge group. And in the future, we're going to have Charles create a group for you around multifamily investing and passive investing. Okay. And this is, so as stated before, we are forming a membership. And if you want, these are just some of the benefits of the membership. If you want access to the membership, there is text down here, join.digitalrealestatestrategies.com. That's how you get access to our membership. Right now, it's only $47. Might go up in the future. But if you want access to the recordings, slideshows, presentations, previous events, you just access that link, join.digitalrealestatestrategies.com, and you can get access to our membership. So there you go. That's the link again. That's how you join and become a member of our group here. So that being said, I'm going to hand it over to Charles. Again, we're turning this meetup into multiple streams of income and passive real estate investing. So what I'm going to do is, Charles, I'm going to hand it over to you, and I'm going to let you introduce our speaker. Charles, are you there?
Sure, absolutely. So, Jerome, thank you very much. We're going to turn over to our guest speaker, Dave Pinson. Dave is currently the CEO and president of Trinity Multifamily. Having served in multiple positions during his tenure with the company, he's climbed the corporate ladder to get where he is today. He'll share his experiences tonight, and he'll give us a lot of guidance on how good property management practices can really make a property shine. He provides strategic leadership and vision to guide the direction and tremendous growth of Trinity. And they've proven to be very successful by managing more than 25,000 units in 17 states. So keep in mind, that's 25,000 units. Dave has a lot of experience that he's going to share with us here tonight. A lot of wisdom for people to gain, and make sure to take some good notes. Before becoming CEO and president, he served as the regional director at Trinity, supervising the Northwest Arkansas, Oklahoma, and Missouri portfolios. And during his time in that position, net operating income increased and occupancy ran above market average. He brings over 10 years of experience in student housing and property management on several different college and university campuses. He's a previous recipient of the National Rising Star Award for Excellence in Student Housing. He served as the director of Housing and Residential Life at the University of Arkansas, Fort Smith, where he was the chief housing officer. And during that time, he was responsible for the overall operations of the Office of Housing and Residential Life. His other housing experience includes being an area coordinator at both Arkansas Tech University and Morningside College. In addition to his work at Trinity, he's been involved in several successful closes as a general partner in Arkansas, Oklahoma, Texas, and Georgia. And he holds both a bachelor's and master's degree from Arkansas Tech. Additionally, he's a certified apartment manager and is accredited through the National Apartment Association. He also holds an active Arkansas real estate license. He was the recipient of both the 2013 and 14 Corporate Supervisor of the Year in Central Oklahoma. And he and his wife, Leanne, are parents of 2 sons and 1 daughter. So without further ado, we turn it over to Dave, who's going to give us a lot of wisdom tonight. So make sure to take some good notes and ask some questions after the presentation ends. So Dave, thanks so much for joining us tonight. I know you're on the road traveling, so we appreciate you taking time out of your busy schedule to be with our group tonight.
Absolutely. My pleasure, guys. Jerome, Charles, Mark, I want to thank all of you for the opportunity to speak tonight. And I prefer more of a question answer type format. I have been with Trinity for 10 years, and really it feels like I've worked for 6 different companies. When I started, we had just a couple of thousand units, and as Charles pointed it out, well over 20,000 now. We do business in 17 states, and would really like to share with you guys on how to select a property management company. And property managers, in my opinion, are one of the most integral roles in the real estate investing game, whether it's single family rentals, whether it's duplexes, whether it's large commercial assets, multifamily assets. And I would like to share with you all I can about how to select that group and how to build a relationship with that group.
Dave, that's definitely some couple of good points you make. So I think the first thing that Dave touched on, really important, and I know for multifamily, this is very true, and I'm sure even in single family, good property management can really make or break the deal. So Dave, when somebody's starting out, whether it's single family or multifamily, what would you say the important criteria they should look for when picking a property management company to hire?
Great question, Charles. There's a lot of great property management companies in the United States, a ton. And when selecting one and through your interview process, I recommend finding one that you truly can build the bond with, because I view property management and ownership like yourselves as a partnership. And through a partnership, there's give and take. Everyone works together, so forth and so on. But you have to find the right group that will help you guys get to the goals that you want to get to. And whether that's 200 single family rentals, whether that's closing 2 large multifamily deals a year, and making sure that you build a relationship with that group that can help you get to the next step. And the second part of that is communication, whether it be through you as a general partner, whether it be through a asset manager or whatever, but doing kickoff calls with the management company and establishing clear expectations, making sure they're involved in the business plan, the creation of the business plan, and involving them as early as you can in the process. The more a property manager is involved, the more they're going to know about an asset, the more they're going to know about a submarket. the more they're going to be able to assist you. So I recommend involving property management in the due diligence portion of it, the underwriting portion of it. Charles can attest to that. We review his underwriting on deals, do sub-market analysis for him, but involve them early on in that process and set clear-cut expectations and guidance for them.
Hey, Dave, that's another great point. So setting expectations, and I think that's where a lot of people probably run into problems with property management companies. So, keep in mind, as Dave is saying, your property management company is almost like a partner in it, where you need to have them involved and you want their participation, you want their expertise. So when would you say it's appropriate for somebody to engage a property manager, Dave? And how soon in the process should they start reaching out, and how soon is too soon?
Well, I recommend that, even if a person doesn't have a property and they're actively looking, or they have an active opportunity to purchase a property, to have a property manager in mind before you even go on that. And you already have rapport with them. You've already maybe met them. You've had a Zoom call with them. You spoke with them on the phone. Maybe you've done reference checks on them. Talk to some of the other ownership groups that they've worked with, but do involve them at that point. And we can do underwriting. We can set property budgets. Sometimes it works better though if we review your underwriting. Given our market knowledge in any given market, we can say, hey, your expenses are $300 a door too low, or hey, we do 2 deals in that market already, and we feel like your insurance is probably going to be $500 a door, and you've underwritten it at $340. But really early on in that process.
Okay, so keep in mind, guys, very important. Dave's saying reach out as early as possible because you want to have that information. You want to be on with that as you're submitting offers so you can make good decisions. The last thing you want to do is have unrealistic expectations for your properties and then give those to your property manager when they won't be able to hit them.
That's right. Yes.
So Dave, when somebody's reaching out to you, what exactly should they be sending you? So if they're asking you to look at a deal and to give your opinion on it, what type of information do you need to make an informed decision and give them proper guidance?
At minimum, Charles, we would need a as recent as possible rent roll and a trailing 12 financial statement. If there's an OM, if it's a listed deal, that's oftentimes helpful too for the demographic information in it, and maybe some of the submarket information. But at minimal, the T12 and the rent roll. And from there, typically we run a CoStar report, and that's a good place to start. CoStar is not the end all to be all, but it's an excellent place to start. It's hard to replace good old fashioned market surveys that are completed with either secret shopping or someone picking up a phone and just making a call. But CoStar, like I said, is a good place to start. So at minimum, we would need that. If you have went far enough, Charles, to underwrite a deal, we would be happy to review that as well.
Okay, great. So let's take it a little further. So let's say you get past the underwriting, and now somebody gets awarded a deal and they move forward. So what's the next step? So let's say they get the deal, they go to contract. So what do you guys help them do from there through the closing process?
At Trinity specifically, we're a one-stop shop. We can help anything, based on what we've talked about thus far with market analysis, underwriting. We also perform due diligence, and there's several property management companies that do. And part of that, and what we do, we will walk 100% of the units and provide you all a written report that you can see the overall condition of every unit. We do that both interior and exterior, point out any deferred maintenance. We build a drop box, give you access to it, allow you to see it just the same way we saw it. And then we also complete a lease file audit. And I didn't come on here to do a sales pitch, but I hope you guys, do pay attention to that, because whatever management company you select should do those items, because, the rent roll can say whatever, but the lease files are what really matters when you're looking at a property, because that's the legal binding contract of the deal. And if the rent roll says the rent's $600 and the lease says it's $550, the true rent on the deal is $550. Okay. And then typically, as part of the process, you will have a list of requested items, everything from tax statements to historical financials, to utility bills, to staffing schedules, or whatever your specific list, whatever you're trying to gather. We will also assist in the evaluation of those items that were presented by the seller.
Hey, so that's a lot of great information. So for some of you starting out, you may not know what all those things are just yet, but they're all important. I can assure you that. So, you know, with Dave, some of the things he's talking about making sure that whatever the seller or the broker is providing you matches up to what's actually real. And you have to, it's like almost like doing a fact check, for lack of a better term. So you're checking all the files to make sure that whatever they presented you is actually authentic. So having a good management company like Trinity, they'll go in there and do that for you. So that way they go through the files and they're going to walk each of the units and give you a report on whatever their findings are. Okay. So then let's say as you go through that process, Dave, you know, if we walk through, you know, from due diligence up to closing. So now after you walk the units, what would the next step be? So are you going to take the lead? Or is that what would be typical for a good property management company? You say they would take the lead on getting quotes for the different CapEx items that you guys identify?
Mm-hmm. Yeah, earlier I mentioned that Trinity itself is a one-stop shop. So with our management, we also do construction management as well. So if we uncovered, you know, hey, there's 4 out of the 6 buildings need a new roof, I'm going to turn that over to my construction manager, and he's going to start gathering bids at that point in the process. Maybe another ownership group wants to upgrade 30% of the units. You're going to talk to Chris at that point in my office, and you're going to kind of tell him what your expectation is, how much rent you're trying to get, and he's going to tell you commonplace practices and ideas and finish outs that will help you get to that rent rate. He works very closely with operations, and you know, he'll tell you, hey, it's gray wall color, it's bright white cabinets, it's black appliances, you know, it's that sort of stuff. He'll tell you what's popular in the marketplace, and he will help assist in bidding those items out for all of you, and that's part of the due diligence package that we bring to the table.
Okay, great. So now let's say we go a little further in the process. The client closes on the deal. So from that point, what does a good property management do first? So let's say you take over the property. What do you do on day one and throughout, you know, the first week and the first month?
Well, I'll backtrack just a little bit. Typically, after the earnest money has gone hard on the deal, obviously due diligence is done at that time. We would start looking at the staffing schedule of the property, and we would interview the current staff if they wish to stay or if we wanted to keep them, or we would start looking for staff in that specific market to run the property. Okay, and then Charles, after the deal closes, we're obviously there day one. We're waiting on the close. With enough ample time, the software is already set up, the data entry is already done. So we're going to go in and do one more final file audit when the deal closes to make sure that we've got the information in our software. We're going to transfer utilities over into the new ownership, the new legal entity name, the new tax ID number, and we're going to walk any of the vacant units at that time to go ahead and triage those to get the make-ready board updated and get a quick a start as possible. Also, part of that process, we're going to notify each and every tenant that's there that there is a new ownership and there's a new management company. We're going to instruct them on how to turn in a work order, if there's an emergency, who they call, who they pay their rent to, how they can pay their rent, all of that stuff. And that's really done face to face. Now, if they're not home, you know, we leave a note, takeover letter on the door.
Okay, so guys, what Dave is saying there is it's about having the right personnel with the right systems in place. Is that right, Dave?
That's right, and that's the only way to build a large company, a large investment team, or whatever, is through not only repetition but policy and procedure and things of that nature.
Yep. Okay, great. So, are there any policies that you guys have implemented that you found have helped make you more successful? Is there something that you would say stands out that you would say this is an absolute must for good property management?
Well, in regards, excuse me. Sorry about that. Allergies are horrible here in Arkansas. But one of the initial things that I do recommend, and I brought this up, and it is policy and procedure at Trinity, and that is that opening kickoff call with the ownership group. Okay, and that really sets the business plan and the tone for the duration of our management and how quickly we act. We have taken over obviously hundreds of deals over the course of the past 10 years. And one of the most important policies and procedures we have is our takeover and integration checklist. and we briefly talked about a few of those items, and I just skimmed the surface of it. It's very in-depth. Where I have seen that we have not performed well in the past, or other management companies that don't perform well, they get a very slow start at the location for any given reason. Maybe the software wasn't set up in time. Maybe they didn't hire the right staff. Maybe they had a hard time hiring the staff. But really getting, really how you start oftentimes really determines how you finish something. And the property management is no exception. So it's really imperative on how you start. Obviously, hiring practices, the policies and procedures that we have around that are instrumental. Because if you think of property management, it's like a lot of other businesses in a lot of ways. But based on the market, maybe you have a $15 to $17 an hour manager that's running a multi-million-dollar asset. So the training portion of that, the new hire orientation part of that, is instrumental in getting not only the right start, but having that person there long term. Some of our most successful apartment complexes has had the same manager for 3, 4, 5 years. So those would be two of the big ones.
Okay, great. So let me ask you something else you touched on there. So keeping the same manager and retaining personnel. So what do you find helps you do that and to keep the right personnel there so that way they want to stay motivated to continue performing well at the property?
Well, it's a very competitive workplace right now in every business. And, I don't really see that changing anytime soon. Just kind of given where we're at as a nation right now. So, you've heard the old saying, people don't always work for companies, they work for people. And a lot of my corporate supervisors, mid and senior level management, are people that have been with a company that I hired 8 or 9 years ago. So you not only have to create a great place to work, there is obviously a compensation and benefit portion of that too. And if we think back about the history of property management, 20, 30, 40 years ago, the business has revolutionized. I mean, at one point it was, you did that maybe if you were in between jobs, or maybe you wanted a free apartment, so you did some leasing there. But property management is really a career field now, and a professional career field. And I think that's probably done more to revolutionize the business than anything,
Okay. Well, that definitely helps. We have a question in the chat box from Robert asking if you're hiring.
Yes, we actually are hiring. Yes.
Charles, Dave, we have some questions. I guess from the audience. How would you like to handle that? Do you want to wait, or do you want to open it up?
I'm fine, and we can go back and forth. Absolutely.
Okay. All right. So Ricky, do you want to open up your microphone and ask Dave a question directly, or Charles, whoever you have the question for? Feel free.
Yeah. Can you hear me?
Yes, we hear you.
Yes, sir. Yes, sir.
Cool. So I just wanted to get a little bit more information on like the due diligence period. So typically in the industry, do you charge like an upfront fee to come in and do the due diligence, or is it like you take portions of the rent and then there's only a fee if the person doesn't close or something like that, or how's that structured?
We negotiate those based on a couple of different things. Obviously, geographical location is one. How big the asset is, how many people I'm going to have to send. There typically is an upfront fee for the due diligence. We make it very affordable. It ranges anywhere from $10 to $20 a unit. And then a portion of that would be refundable if the deal closes and Trinity manages it. Okay, and it would be deducted from the first month management fee.
Cool. Thank you.
Great. And we have a question from Arthur as well. Arthur, do you want to speak up?
Yeah. So it sounds like you guys are, Trinity is in all markets, because you mentioned that Mark and others would bounce off new deals to you before the deals are signed. I just wanted to make sure I was understanding that correctly. Is it only certain markets, or is it that you guys work in, or how does that work?
We are not nationwide, sir. We operate Midwest, Southeast, and we have other key markets that we serve as well. But pretty much anywhere East Coast. Our largest portfolio is in Georgia. We do some work in Ohio, some work in Michigan, Illinois, but it's about 17 states.
Thank you.
You bet.
Dave, I see we have a couple of people that asked for your contact information as well. Do you mind if we share that in the chat box?
I don't mind at all.
Okay, we'll put that into, so that way if anybody has a question for Dave, or if they want to.
Absolutely.
Do you have a website, Dave?
Yeah, we do. It's trinitymultifamily.com. And it will kind of give you there's actually a Google map with all of our locations. It's an interactive map that you could click on a property in Tulsa, Oklahoma, and it will actually bring that property up, and you can kind of see the markets that we're in. We have also operated in places like Arizona and Indiana as well, but kind of like I said, the hiring market's very competitive right now. So is the real estate market, and there's a lot of stuff trading hands right now, buying and selling and trading. And the thing about property management, it's like every other job. If you do a bad job, you get fired, right? But sometimes in property management, when you do a good job, you still get fired because the property does so well. The investment group meets their goals. They sell the property for a profit. And then the next person that buys it already knows the Dave or already has a Trinity, and then they manage it. So there's lots of stuff trading hands right now.
Okay, great. So let me ask you another question. So I know one of the things we mentioned during the introduction was that you have the certified apartment manager designation.
Mm-hmm.
What importance would that hold in the industry, and why should somebody consider somebody with a designation like that over a property manager that doesn't have one?
Well, the CAM is from the National Apartment Association, okay, and then IRM has, I believe, like the CPM designation. And really what that is, it's a pretty intense course that involves obviously class time, there's projects, and then it has a final project. It's kind of like a master's degree, Charles, to be honest with you. And you learn everything in the class from real estate budgeting, how to set property budgets, how to do property inspections, and it's a pretty neat deal. And like I said, that as the industries became more professional, those designations do become more and more important, because the stuff you have to go through to get them, obviously, it's I don't want to compare it to college, but it is coursework.
Okay, good. So keep in mind, guys, with anything, you want to make sure that you're getting somebody that has the right experience and the right training. So looking for those designations is definitely one criteria you could look for. Now, Mark's asking, actually, we have two questions. So Ken's asking, what geographical area does he cover again? So he's in 17 states. On the website, does it say what states those are, Dave, if people wanted to look?
It will have bullet points on the Trinity locations that will show the states that we currently serve in.
Okay, great. And then Mark has a question. What is your minimum, I assume the minimum number of units that you manage?
Yeah. That's going to be very market specific. If it's a hub where we have a lot of units, then there's really no minimum on that. I can't enter a new market for, a 12-plex or a 6-plex or a single family home. But if it's in Little Rock, Arkansas, for example, we would take over one unit there. If it's in our home location of Fort Smith, we would take one unit there. We actually have a fairly sizable single family home division, but it primarily is in Arkansas.
Okay, great. So do we have any other questions for Dave? If so, you may as well open up and speak now. You can ask Dave directly. Now's a great chance. Dave's an expert property manager, so keep that in mind.
I had a question.
Yep, go for it.
As a new investor, I have 2 duplex right now. At what point do you search for a property manager? That's one question. And then how much am I expected or should I expect to pay? 8%, 10%, or is it a certain amount? And then my other question was, when I do that transfer, when I do decide to go to a property manager, like right now, all the income is going to a bank account that I control. At any point, does a property manager control the funds, or how does that work?
Okay. And one, before I answer those, you're from Kansas City, right?
Yes.
That's historically been one of my favorite markets to work in. It's a fantastic market, and that's about 4.5 hours north of our home location in Fort Smith. So
okay.
And we still do business up there.
Oh, that's good to know.
Yeah, and when to select a property manager, part of my sales pitch, when I'm asked to do one, I take the headache out of the day-to-day of the rental business, okay? Because we're going to answer that 3 a.m. Sunday morning call that there's a flood. We're going to send professionals out to make the units ready. We're going to make sure that all the lease paperwork, the I's are dotted and the T's are crossed. So what I tell folks like yourself when they ask me that question is, at some point you may get tired of it. And obviously that would be a good time to, or if you have goals to own multiple units. Because the earlier you start working with a property manager, the more comfortable you're going to be with them, but the more comfortable they're going to be with you too. Okay. And also some property management companies will actually assist you in finding deals as well. A lot of them are licensed brokerages, and they're not going to go out and compete with a CBRE or a real estate firm. But for example, they may work with an owner that has a duplex in Kansas City for sale that doesn't want to put it on the market. And they may know you're looking for a duplex in Kansas City and you want an off-market deal. So they can be advantageous more than just the actual property management. In property management, typically the fewer the units, the higher the fee. So most single family homes and 1, 2, 3 owners that own 1, 2, or 3, 4 units, it's going to be somewhere around 10% management fee. Now, the more units you have, maybe you own 7 or 8, maybe it goes down to 8 or 9%. But another thing I would like to tell the group is to be mindful. A lot of people focus on the management fee, but oftentimes in the smaller, the owners that own fewer units, the higher fees come from the maintenance billbacks and things of that nature. And, you may get charged $95 for a stopped up toilet, for a call out. So, and Charles can also attest to this. When I'm involved in a deal, I'm asked to manage a deal. You're going to get a management proposal and fee sheet from me. It's going to outline everything I'm going to charge you. And I'm not going to charge you anything that's not on that piece of paper. And you have that from me before you ever close the deal, before I ever take over the deal. So I would highly encourage all of you, regardless of the management company, to request something along that lines. What fees can I expect your firm to charge? And that will help you make the determination, or perhaps negotiate lower fees before you're being proactive and not reactive at that point.
Guys, keep in mind, what he's saying is just about setting clear expectations, making sure you have a good understanding. So regardless of who you're using, that's good business advice in general, but definitely with property management, because for me personally, I find that probably the biggest reason people don't have success with their property managers is they don't set that clear expectation at the beginning. So Robert's asking a question: how many single family properties would get you into a new market, say for instance Shreveport, Louisiana?
Robert, I've actually managed off and on in Shreveport, and that's I was born and raised just basically in Texarkana, so I've spent a lot of time in Shreveport. Like I said, we've managed there off and on. Currently in Monroe, currently in Lafayette. Got several Louisiana deals. Like the state, like managing there. It would, at this time, considering we don't have a multifamily asset there, it would be a pretty significant number. And what I base that on, if to enter a new market, I have to have an asset that's large enough for me to hire a local person there to help oversee that. So that's kind of the baseline. So it would probably take, 80 or 100 houses perhaps to enter a new market. Now, we have been looking at a few multifamily deals in Shreveport, and obviously that would make it easier to take over a smaller number if one of those were to hit.
Okay, great. So Ken's asking, is your charge sheet on the website? I would think that's probably more customized than something else.
It is customized, and I personally build those for any and every deal that we would do.
Yeah, so keep in mind, guys, whenever you deal with a property manager, it's never really one size fits all, because you're not going to charge the same amount to manage a single family home that you are a 200 unit property. So things are going to fluctuate a bit with that.
Correct.
Then we have another question from Mark L. Can your company help diversify in other markets? So when you're saying diversify in other markets, what are you asking, Mark? Are you saying if your investments are in one area?
Yeah, so like I live in the Raleigh-Durham area, so it's a pretty hot market and pretty competitive. But sometimes you want to get some information on other markets that might not be as competitive or have opportunities, and you want to build your network to markets that you can find a good representative besides just a realtor. But once you close the deal, kind of getting that diversify of how can I get a better rate of return, and do I have a team that's on my side?
Yeah, Mark, we would absolutely help with that. You know, we started with a group out of California. It's been probably 5 years ago on a 50-unit deal in Rogers, Arkansas, and in the past 5 years have closed over 60 deals with that group. So, absolutely, we're more than happy to help. You know, if we can.
Okay, great. We have another question here from Jeff as well. So Jeff's saying he's underwriting a deal in the Atlanta area. What would be the best way to contact you with questions concerning the asset?
Well, we like I said, Georgia is our largest portfolio now, and we do manage in Atlanta proper and basically every other sizable market in Georgia, with the exception of, I guess, probably Columbus and Valdosta. Just closed a couple of deals a few weeks ago in Augusta. You're more than welcome. He put my contact information, I believe, in the chat box, and I believe my cell phone number is on that.
Okay, so do we have any other questions for Dave? You may as well speak up. You got a few more minutes. If anybody has questions, go for them.
So I have a question.
Yes, Andy, go for it.
Actually,
I'll let him go. He has a follow-up. I'll wait.
So my follow-up question was, you mentioned that once you have perhaps a large property that you guys are managing, how often do you guys renegotiate the fees then? Because it sounds like if perhaps there wasn't one a prior year and now 2 years later, you have a large hub there, that maybe the fees are less, or how does that normally work?
You know, we would look at that case by case basis. Now, Arthur, are you saying that I take over 10 units that you own, and in 3 years you own 100 units? Is that kind of what you're saying?
Perhaps someone else comes up with a 100-unit property now where I add those 10 units. So now you have a team that's regularly in place there.
Yeah. I mean, we would be open to discussing that. Absolutely. Yeah. And the management contract's really negotiable every other month. I mean, that's the way I set up management agreements. I don't sign long-term stuff. I wouldn't want you to sign long-term stuff. You know, management agreements are 30 days in length for me. They renew every 30 days. It keeps the ball really in both of our courts. You know, if you don't like me, or I don't like you, or, you know, whatever the case may be. And I like to keep it that way, you know, because there's expectations that you have of me, and then there's expectations that I would have of you as ownership.
Thank you.
Mm-hmm.
So I have a question. So how do you keep up with the changes in the market? I mean, like, as to how you would manage the property. I mean, like, we've seen these changes in the last 2 years.
Mm-hmm.
So, I mean, the property management, landlords, they all have a reactionary to the law changes. So how does your team overall adapt to them? And if you can give an example, what you might have changed in the last 6 months or 1 year.
Yeah, absolutely. That really, Sandy, it goes back to the people that I hire, how they're trained, and the duration they've been with the company. My senior and middle level team, and you know, I tell them this all the time, and I mean it. I would put that team of people up against any management company around. You know, like I said, they've been with me a long time. They're highly trained, and to me, the regional director role is probably the most important position in property management, because they really set the tone at the site, and they manage the people. They're the field general, if you will. And we do market surveys every month, the kind that I talked about early on in the call. You know, not running a CoStar. I'm talking going by somewhere, picking up the phone, looking at what the submarket's doing, because I really don't care at the end of the day what CoStar says. If I've got a property that's struggling, I want to know what the 3 closest properties to it are doing. And then I want to look into that and see why they are doing better than the property that I manage or the property that we have. So, you know, that's kind of a real life example. We also use national Blue Moon leasing software, which I don't know if any of you are familiar with that. It's a great product, and it is constantly updated. It is an online electronic lease. And for example, the lease in Atlanta, Georgia is going to be different than the lease in Little Rock, Arkansas. So it's not a standard deal. It's regional and jurisdiction specific. and I highly recommend the use of that. It's a fantastic lease. Now, the past year has been very difficult in property management and really being a landlord and just in real estate in general, unless you're a real estate agent or a broker, because there's been a lot of transactions. But the eviction moratorium has been very difficult in a lot of our locations to overcome. And as you can imagine, some markets obviously have been hit harder by that than others. But, there's been some, definitely real life examples through that eviction moratorium that we have had to overcome and work through with the respective ownership groups.
Dave, let me ask you a different question. And I realize this may not be a property management thing per se, but being you touched on the eviction moratorium, one of our favorite subjects for the last year and a half. So at this point, we're at a point in time where it seems like the eviction moratorium may have been struck down. I'm going to say seem because I reserve judgment to really make sure it's gone. But if it is, and we start seeing evictions again in areas that haven't processed in quite some time, granted, it'll take the courts a while to catch up, but do you think that'll lead to a flood of available units once these evictions start getting processed?
Well, maybe in some areas, but, with as many delinquent tenants as we've had in certain areas, we've also had qualified traffic on the backside of that as well. People coming by wanting to lease. Now, the big thing I'm concerned about more so than the flood of vacants is the capital that's going to take at these locations to get these units turned so that the next tenant can move in. I'm more concerned about that. Now, back to the eviction moratorium, we all know what the Supreme Court said last week or the week before. And I saw a memo from my neighboring city in Tulsa, Oklahoma, saying that the eviction moratorium was still, in fact, intact there, and they were throwing out all evictions until the pandemic was over with.
So keep in mind, guys, for anybody who's not active in the market yet, what Dave's saying on is very much, I think what many of us have experienced, because at this point, even though there is a federal moratorium, it really is at the county and city level because it varies widely. You'll see how they enforce it. You'll see some counties that have given it no regard at all. And then you'll see others that have totally halted evictions and haven't done any. So it's really running the gamut. Mm-hmm. So the other question I was going to ask, and to see what your thought is on this, but obviously it may not be as pertinent, but which markets or the markets you guys are familiar with, do you see potentially being a problem with the inventory and potentially leading to owners that may need to get rid of these widely? Do we see any opportunities coming down the line? Are there any markets that you're seeing that may be exceptionally prone to that?
Little Rock, Arkansas has been tough. Believe it or not, there's certain pockets in Dallas, Texas that have extra high delinquency right now. Some of the southern Houston suburbs have some pretty high delinquency. And when I say South Houston, I'm talking Port Arthur, Baytown, Portland, places like that. Monroe, Louisiana has fared pretty well. Jackson, Mississippi's been tough in regards to delinquency. Albany, Georgia, if any of you are familiar with that town's been very tough in regards to delinquency. The Macon Warner Robins markets, surprisingly, and Savannah and Augusta have all fared very well during this. So it's really spotty. But if you're looking for places to look for deals right now, I would highly recommend the Kansas City area and pretty much anywhere in the state of Georgia right now. There's lots of good stuff going on in Georgia.
Hey, great information, guys, especially for everybody starting out. If you haven't picked an area, it may give you some food for thought.
Mm-hmm.
Okay, do we have any other questions as we're getting ready to wrap up shortly? If you have questions, you may as well ask now.
Hey, Dave, I got a question for you.
Yes.
So things aren't always going to work out great. So let's say you had a property management company that you were using and things weren't going exactly the way everyone had planned.
Mm-hmm.
Which I'm sure you've taken over properties that other people have managed. What's the best way for an owner to mitigate any potential losses or mismanagement, things to keep an eye out that you've seen over your years that other management companies have done, in particular on the, say, larger multifamilies?
Okay. Are you, and Is this hypothetical or is this like a real life question? No, I'm kidding. I would make sure that I'm still getting my standard reporting package, and I would scour those reports line by line. I would also schedule a meeting with whoever my contact was at that company, whether it be the president, the CEO, the vice president, the regional director, and I would request a meeting to go over with them those reports line by line. And I like to look at any variance more than 5%, and to really dial in on what's going on at the property. And I'm a property manager. Somebody has that call with me, I know they're not happy. Okay, I know we've got to do better, and really start to dial down in that regard. A site visit from an owner is not a bad thing. A site visit from an asset manager is not a bad thing. My team's usually happy to see an owner when they show up. They really are. So, I would start out with those things, and I would give them a clear line of instruction, or really not instruction, but direction on what you expect the property to do, and then put the ball back in their court and tell them to give you a timeline on how quickly that can happen. And then if you aren't satisfied with that timeline, then you've got to turn the next stone.
Hey, Charles, can I ask a question? First, Dave, thanks a lot for the great information tonight. I noticed on your website you have all these locations. Is your construction arm available at all those locations?
It is. Now, depending on what the service is, what all needs to be done, yes, it can be.
Now, is there any value add or heavy lift that's too heavy? Like say we're taking over like a vacant 40 unit. Would that be, that's more of the construction than it is property management. Would you guys able to handle that, or would we have to redo it first and then as tenants start filing in, call you guys?
No, sir. We can handle that. We've in the course of the past 12 months, we've turned over 3,000 units in Georgia with the construction team.
Yeah. And do you also do like Section 8 or subsidized housing?
We do. We have a couple thousand unit LIHTC portfolio that we manage as well. But yeah, we're used to dealing with that sort of stuff. You bet.
Okay. Thank you.
Just out of curiosity, why Ken brought that up. I mean, I happen to like subsidized properties, but do you have any tidbits people should be aware of as they're looking at subsidized or LIHTC properties that, any little words of wisdom you can impart them with?
Yeah, you've got to work with a company that one either has a compliance department, and that's something that I thought about doing at one point, and I just told you guys we do have a LIHTC portfolio, and I look into what the compliance department really has to do, and I'm like, well, I'm going to have to hire 3 or 4 people to truly do this, because I'm talking you have to dot every I and cross every T. The reporting on it is absolute, it's huge. And what I ended up doing is partnering with a tax credit firm that has their own insurance. They're licensed, bonded, and insured. They help protect you and me and what we're doing as far as ownership and property management. And it's really a minimal fee per month. They'll keep the property in compliance, and depending on the size of it, it's $100 to $400 a month. And they take care of the reporting. They do all of that stuff. I see a lot of people buy tax credit deals that are out of compliance. And when a property is out of compliance, it literally costs thousands of dollars to get that property back into compliance. With that said, though, I think that's it's a growing space in our business, but I almost think it's an untapped space in our business, because I'm seeing some really good LIHTC deals hit right now. And a lot of people are scared of them because they don't understand them. But if you've partnered with the right firm on that, there's really nothing to be scared of on it.
Okay, some good information. Do we have any other questions before we wrap up for the night? Okay, if not, do we have any parting words from either Jerome or Mark? Well, in that case, Dave, we want to thank you for coming on and sharing your expertise with everybody here tonight. And we'd like to thank everybody for attending. Keep in mind, we do a virtual event the first Wednesday of each month, 8:30 Eastern, 7:30 Central. And for anybody local to the Charlotte region, we do have an in-person event on the third Wednesday of each month. Just check the meetup page to make sure that we have the venue, because sometimes we do change venues. So make sure to keep an eye on that. And we wish everybody a happy Labor Day weekend. And we hope that you enjoyed tonight's event and that you come back to future ones. Thanks a lot and have a wonderful evening.
Thank you. Have a great one.
Sure.
Thank you very much. Enjoyed it.
Thanks, Robert.
Recording stopped.